we're not gonna go too in depth. I have a few things to do afterwards, so we're still gonna be doing the review. We'll just be going over it a tad bit quicker than we usually would. Let me adjust this real quick so you guys can see it with the correct size. Actually, this should be much nicer. Can I get a little confirmation? Can you guys see a little bit better now? Yes, awesome. All right, so as we were thinking, well, at least for myself, I was looking for lower prices, right? We talked about it yesterday when we closed our charts, right? And as we can see, we expanded very aggressively higher, right? So, well, we did not reach for lower prices, but what did we have? Well, very simple. We had SMT, right? So let's try and mark it out. NASDAQ failed to take out, this was previous week's low, while ES did. And that SMT was confirmed earlier this morning when the news also created SMT. So if we dive straight into the price action, as I said, sorry guys, but it's going to be a little bit of a quicker one. We had PPI this morning. So this is our CPI wick that first formed the SMT, but then had to be confirmed. And that is where it's actually beautiful. And you have a confirmation by having another news causing the same SMT. So ES being stronger to the downside, weaker, however you want to name it, and NASDAQ being stronger. What did we do today? Well, we reversed out of that move. And why was it so aggressive? Well, all of this low resistance liquidity has been building up for a while. So now I'm going to be looking for a run on all of these and expecting it to run pretty aggressively, right? We're not talking specifically about tomorrow. I actually decided I'm not going to be giving too much insight on price action for the coming days, right? I don't want to spoon feed you guys. I want you guys to work for it, and I think you can. But so I'm not going to do intra-week analysis or outlooks for like the coming day and whatever. I'm going to keep that for the paid students in the future. But to stay on track, right? To stay on subject, we had a beautiful low resistance liquidity run. And see, I'm on an hourly chart because on an hourly chart, everything was clear, right? What do I have right here? I'm looking at NASDAQ Y because that's my stronger asset. If I'm going to be looking for a long based on SMT, I'm going to be trying to trade my stronger asset. Why would I try and trade ES here when NASDAQ's cleaner, right? So on NASDAQ, we had a beautiful inverted fair value gap inside this gap, which was the PPI gap. Yes, I was making sure I was not mistaken. But yes, the PPI fair value gap right here. We dug into it, retesting this inverted fair value gap. And if I draw out my premium and discount levels, if that is not reversed, please, thank you. My premium and discount levels right here, you'll see we return toward discount and efficiency. So our price action for the 10 a.m. candle was super clean, right? It went where? To a discount, to our discount and efficiency. It had to retrace after we had SMT presence before reversing. So our higher time frame order flow was pretty clear. It was internal to external. We're heading higher. We're going to be targeting external range liquidity after reversing. A good low-hanging fruit objective would have been anywhere in these quarters right here. So quarters of our higher time frame and efficiency. As you can see, if I move my premium and discount right here, we almost had a tap of consequent encroachment and then closed through it. So then I was looking for it to trade on the next one. And once we're there, you don't have much insight until this candle prints, right? And there was the auction, the bond auction, 1 year bond auction, sorry, not option. So right at this point, that was your low-hanging fruit. But now we'll dive deeper and see actually how that move was made. I'm not going to be in a 15 minute. I just wanted to tell you guys because this is the same as I could see on my 1 hour. It's the same exact inefficiencies I'd be looking at. It doesn't really give me more insight into what's going on. But if I dive to a 5 minute right here, was it in the 5 minute? No, it was in the 1 minute. I'm looking for a SMT at the lows. So I'm actually going to go on my SMT chart right now. Oh, let me just clean this up for you guys. So I'm not trading SMT. And let's just head over to 10 a.m. Because when we trade ICT, right? What is it actually that we're trading? Well, we're trading price and time. And what's the biggest indicator of that? Power of 3, right? So when I have a new candle opening at 10 a.m., I'm looking for that power of 3 to be in line with a price move that could go higher. Was it? Yeah, open, low, high, close, right? That's what I'm looking for if I'm bullish. And as I said with the SMT of the news, that was telling me, okay, now we're going to push higher. Up to where? Oh, well, we're going to dig into our bearish fair value gap and possibly reverse higher. But at this point, could we just start going up? Yeah, sure. But we left a lot of liquidity under this consolidation right here as well. As you can see on ES, we had equal lows. So at this SMT as well. And what also did we leave? That big gap from PPI. We had to rebalance that. I'm not going to go in depth about the opening range, but we also rebalanced our opening range gap, which was just additional confluence, right? So that's why I'm not going to go in depth. It is not a reason. It is not anything like that. It is just additional confluence. But looking at my charts right here, and as you can see, I've drawn the PD array quarters from this gap of importance, right? There was a lot of displacement at this news. We respected one of the quarters, telling me that, okay, well, for now, that's all we're going to be digging into this inefficiency. And yes, on ES, we dove in deeper, of course. But that is enough to just tell me, okay, well, now we're ready to go up a certain ways, right? And that is also some sort of divergence. As I said, I don't have much time today, so I'm not going to dive into it. But there's a few hidden gems in my executions from today. It was a beautiful opportunity to get into that, so I just decided to share it directly on my chart. So go watch that. It's on YouTube. It's on my Twitter. And it's definitely valuable insight there. But as we can see, we inverted this fair value gap, which is a change in the state of delivery. That is what gives us the insight into, hey, okay, now we're done going down. We have our important inefficiency, which you could also say is a higher time frame inefficiency. Because if I go on a 1 hour chart right here, this PPI made my gap I was looking at, and this inverted fair value gap. So I had everything I wanted to know on that 10 a.m. downswing. That's everything I wanted. We were very far down here, right? That's the low of the 4 hour candle that we were just looking at in this chart, that we were just looking at right here. We invert this. It is a change in the state of delivery. We go down before changing to a buy program, which right here forms our bullish breaker in this zone right here. Calling it a zone is a little bit weird, but right here I have my bullish breaker. What is within this breaker? After the true displacement higher and the inducement of this liquidity. That's not taking it out. That's a tick. I need more than a tick. Everything to the left is low resistance. We have equal highs right here. So I'm just telling you guys step by step the context in which brought me to trading this. What do I have? I have resting liquidity. I can see it. It's an important pool of liquidity. What do I have? Oh, well, 10 a.m. 10 a.m. power of 3, manipulation lower. What is this? Accumulation. I have consolidation right here. Displacement lower to rebalance this inefficiency, and then internal to external, targeting the opening range high, which would be right here, right? Those equal highs, but you had low resistance liquidity right above. So first objective was clearly those equal highs though. But to get back into it, what do we have inside that breaker? Well, we have our unicorn. In case you're not familiar with a unicorn, that's the model I teach, right? I haven't looked at who's here. Familiar faces right now, so I have a few students in here. Everyone knows, well, everyone here probably do know what a unicorn is, but the specific trade that there was today, if I have the right stop loss placement, which is the 3 PD array rule that ICT once shared during a Twitter space, and it actually works wonders. So I have one fair value gap, this order block, and the liquidity resting below this low. So my stop would be right here, and you have a beautiful 3.3 R trade to a low hanging fruit objective right here. So see, just by looking at the things I looked at, I could go in depth about everything that happened today. But the truth is, you had one opportunity. If you missed it, the whole day left without you, right? So to me, it's you entered here or you didn't enter. Even if you tell me, okay, well, here, let's go look, right? Well, actually, I just see a continuation right here. So possibly 1050 to 1110 macro. But at that point, well, we're pretty close to this. Yes, it would have been a very high stress, well, lower probability entry, of course, because we're deeper in the range. This I would allow, but anything further than that, to me, is just too late. There's no point. It's a very aggressive trending day, right? We've been building liquidity for a while, as we've seen on our higher time frames, right? We've been building up this move. We have very aggressive SMT. We're going to run to God knows where, right? We had what? I'm forgetting. Right now it's showing me because I'm not using midnight open on this indicator. Let's go look. On NASDAQ, we had a 430 handle range. See, that's big, right? We have an aggressive week right now. And to me, if you did not trade this, there is nothing else. And then, of course, leave a runner on, right? I closed my last runner. I think it was 340 or something. I'm going to show you precisely right here. So this right here, I actually had my stop right here. And once I saw this move and this going back down, I closed it somewhere within this down close candle. I was like, okay, I'm done for the day. I'm happy. And missed the small little move, but I was already up 400 and something handles. 300 and something handles from this point right here. Not 400, sorry. But see, it's on days like this. Yeah, and yeah, exactly as you say, Emil, by the way, low probability. But specifically, it's on days like this where when you have such aggressive trending days, those are the best, right? Because you just enter in the morning and you just let it run. But if you miss that morning opportunity, you have to just let go. You have to close your charts. Maybe you get a PM continuation. So when I see the morning just run aggressively, and here was higher resistance, but once we ran through this, that becomes lunch, actually. That's perfect. Then you might look for PM opportunities. But after I see this run here, I'm not looking for a short in the PM. We're clearly bullish. Sorry about that. I guess I did not have my thing silenced. My bad. But see, I'm just going to be looking for a PM opportunity, and that is long, right? That is on side with my higher time frame analysis. I'm never, ever, ever going to see SMT like that at a key level like this without it retracing higher. Where was the point where it had to go? Well, for me, this level was it. And as you can see, PPI went there. But I was expecting a continuation. I was expecting a large range day. So if you actually look at this, you could anticipate why something would not be SMT. Because here's a good thing, a good way to filter out where is the true divergence. This was SMT. At 9 a.m. when we had our 9 a.m. downswing, you're like, okay, well, there's SMT at the highs. Sure. Yeah. So which SMT do you choose? Well, the one that makes the most sense. I have very higher time frame SMT right here, and then I have more SMT right here, just confirming. I'm not looking for a move lower. NASDAQ is stronger right here. And what makes sense on DXY? Well, we just took out external range, right? If I go more precisely, we just took out external range right here. This is an order block, and yes, I do teach to draw order blocks with lines and not rectangles, but here I already have lines. Okay, so none of my students tell me that shit. But we dug into this order block, we just took out external range liquidity. It would be okay to expect a retracement into our range. So it's in line with DXY. I would not expect DXY to expand through this after we had this huge bullish day. Right? Just look in the past. I'm not looking for a big expansion past this. But again, to just reiterate what I just said, this was textbook trade. Right? Power of 3, higher time frame context. There you have your first indication that we're going to be pushing higher. This inverted fair value gap gets respected, displaces higher, creates a breaker, inducing highs. This is all low resistance liquidity. We've clearly been inducing this level right here, right? Tapped it almost 4 times right here, and let me just mark it out like this. So you have accumulation, manipulation lower, displacement higher. You can add additional confluence to these levels by using standard deviations. Do I see a body close below this? No, we don't like this area, right? It's that simple. I don't have to dive in deeper. So this adds confluence to my trade. I have SMT. I believe there was SMT also further down the line that possibly gave you another opportunity. I'm just looking very quickly. I don't see any SMT in my face. Do you guys have anything you saw? There's divergence, but I don't see SMT. So there was possibly a re-entry possibility, but as for myself, I was short here and long here afterwards. So really, to me, that was a very clear setup. And right now, I'm just going to ask you guys, was that clear for you guys? Right? I know Julian's in here. He traded it. Nak, I'm guessing you did too. But what about the other ones, right? The traders in here. Because this is the kind of setup you should be looking at learning how to trade, right? Market maker buy model. Yeah, sure. But see, that's the problem now. With everything being public, and especially like this week or last week, everybody been leaking courses and stuff like that. People concentrate on the wrong things. For example, my understanding was this was the second stage reaccumulation of market maker buy model after we had SMR. Okay, what time frame? Right? What time are you talking about? Is it a buy model for the next 3 weeks? Is it a buy model in my 1 minute chart? Is this original consolidation and then this ends the market maker buy model? Well, shit, you tell me, right? Ren, what, 200 handles more than this shit? A little more than that, actually. See, I'm not. Oh, why not? Why not? Let's go look. Oh, okay, well, like 200 and something handles, 230 handles more. So are you telling me it's because that market maker buy model? You know, it's just, I don't like people being market maker buy model, that, and then, oh, learn this new thing. People are just promoting shiny object syndrome. I keep it simple. I have a very deep understanding of the markets. Truly. I could spit some real sauce in here. But why am I not? Because I don't use it. I know it. I just don't use it. But it's fun because sometimes I just see it and I'm like, oh, that's interesting. That's a Reaper. Or, oh, that's interesting. I know that when I have those 3 wicks like that, I can use that as a PD array. Do I use it? No. I see it in hindsight because it's fun. What do I use? You have it all on my chart, right? What did we just look at? Very simple. We looked at SMT. We looked at inefficiencies within premium and discount. And then what else? A unicorn entry and standard deviations. And of course, it all runs based on power of 3, right? I'm looking for a candle to be formed. That's how I see how price moves. So where do I want to buy? I want to buy below midnight open. That's where I'm going to have the best prices. And I want to short above midnight open. Why? Because I want to sell or buy that wick. Right here, midnight opening price was right here. Here, let me mark it out precisely. I don't want to half-ass this. Actually, I'll show you guys on my chart right here. because you have the line. If I'm not mistaken, no, because the new daily candle open. That's awesome. Let me mark out midnight open for you guys, because the markets aren't complicated. People are telling you, oh, this is the hardest thing you'll ever do. Yes, not because the markets are hard, because you're gonna make it hard on yourself. That's it. Right here is midnight open, my beautiful gray line. Let's just say I zoom in on this, which I should have done a while ago. My beautiful gray line right here. So what did we do? Well, open, accumulated. Then what did we do? We manipulated lower. How do I know this is my manipulation? Well, shit. It's a move to go take out liquidity. Here, I'm not going to be precise on it. Let me just choose this one, right? I'm keeping it simple. Go take out liquidity. And as confluence, SMT was present, right? That is the SMT. We were just looking at these lows, which I don't know why that is not drawn anymore. These two lows right here with these two lows right here. Let me just put it another color so it doesn't get too confusing. So I have this. So I used SMT, and then I have accumulation, manipulation. So now I can expect distribution higher. Okay, cool. What else? Well, if I zoom in, I'm looking for the same thing on a 4-hour time frame. See, you're laughing right now, Emil, but it is actually keeping it simple. That's it. What is it? It's power of 3 inefficiencies. That's it. Right? Elements of time. What are elements of time? Well, power of 3. Power of 3 is time. And of course, you can start implementing macros and stuff like that, right? Stuff to give you a little more insight into precisely where price will turn. But let me give you an example here. Did you need that to enter on this inverted fair value gap? If you saw my execution, did you need to enter right here? No. Right? Where could you have entered? Right here. Did you get any drawdown? Yeah, for 3 minutes. Then it never revisited even close to your entry. How much you do make? 4.12 R right here? And then you could have let it run. And let's be honest, guys. If you just held it on and you closed it at 4. So you didn't even make choices. You just closed it on session close. So that is, where is that? That's 4 right here. I'm going to look at the opening price. That's 18,482. So 18,482. Let's just be semi-precise. 482.25. All right, 1 tick less than 16 R. All right, that's a month for some people. Some people who actually trade would be extremely happy with 8% a month. So, okay, your month is done. Now you have no stress. What do? Demo trade. Learn, get deeper understanding if that is what you want, right? If you want to learn precisely what market maker models are and everything like that, sure, learn that. Or you can understand that every market maker model is simply the first stage of power of 3. And no, I am not going to go in depth about that. That is some stuff that I will sell for millions. I'm exaggerating, but you understand what I'm saying. This is not something I want to share to everybody. This is something I'm going to either sell or make someone work very hard for. But on that beautiful note, I wish you guys a great night, unless there's any questions left. I'm looking at chat if you guys have any questions, or you can just request to speak. You can come on stage, ask me a question. But again, keep it simple. And that might not look simple for you, but learn simply this, nothing else, and you'll see how price will get simple and clear over the next few days. My pleasure, Nak. All right, well, on that note, you guys have a great night. We'll see each other tomorrow for another price action review.